Hello, welcome everyone to another financial analysis video with myself, Moeed Amin, and my colleague, Ted Wayman. Today, we are looking at a semiconductor company called Alphawave. Now, they are a Canadian company that has floated on the UK stock market. And just before we go into this, don't forget to like, share, subscribe, especially if you've requested this, and we have 3 people request this, which I'll come on to later on. And if you're a subscriber, you will receive an instant notification when we publish this video. So it's in your interest to do so. Now, Alphawave, essentially, they are a semiconductor business. And so they help, they really provide high-speed connectivity for kind of tier 1 style customers. So those that are very data intensive, like, data centers, 5G network infrastructure, manufacturers, even things like autonomous vehicles. So how do I explain this? Now imagine, so their designs and technologies basically help chips communicate with each other faster and with less energy, right? Less intensive cost, which has huge applications. So, chips on a range of devices like smartphones, data centers, autonomous vehicles, gaming consoles, etc. You name it. If there's a chip in there that needs data connectivity, their designs and technology are supposed to help those chips talk to each other faster and with less energy. So this is going to be a very interesting business to look at. It's involved in an industry and space like NVIDIA, Intel, ARM, etc. So what I want to do first is thank our viewers, and there were 3 of them who made this request. So clearly quite a popular business to look at, and a relatively new one in terms of their flotation in the stock market. So they floated in the UK stock market in May of this year, 2021. Not a lot of movement between then and now in terms of their stock price, and we'll show you that later on, so stick around. However, in the last year, it did reach a peak in August and drop back down again. So we will look at the finances. Won't tell us much in terms of the stock movement because there's a huge amount more involved in that, but you will see some analysis on a fairly new entrant into this very big space with huge and wide implications. So Ted, let's have a look at this company, its finances. What have we found for our viewers?
Okay, so thank you very much, Moeed. And so Alphawave. So what's interesting about Alphawave is that they're a Canadian company. As you mentioned, they've just recently listed in the UK, but because they've only recently listed in the UK, they haven't filed any accounts here in the UK. So if you go to Companies House, you're not going to find any accounts at all. If you go to their website, there are no accounts, which I find almost unfathomable that a company lists and people invest without actually seeing the financials of what they're investing in. The only thing I could find was this expected intention to float, which says not for release, publication, or distribution, but hey, it's available on the internet anyway, so why not? Let's have a look at it. And this has got some very, very headline numbers. So this is all we've got to go on, is these headline numbers. So quickly whiz down to the key numbers. Here they are. And what you'll notice is that they've changed their accounting year. So they had a year end of May. They then sort of changed it to the 7 months to 2019, and then they've got the year ended 2020. So this, for example, this 44 million, and it's in Canadian thousands of dollars, so that's 44 million Canadian dollars. We can compare this to this $6.9 million, so that's a massive increase. That's like a 540% increase, but it's not really comparable to this number because this number is only for 7 months, for example. So what are we seeing here? Well, what we see is that the company is, first of all, there's massive increase in revenue. Now, I don't know whether that comes through organic growth or through growth through acquisition, but they are growing massively. The expenses do not appear very high. A quick add up, you'll notice that these 3 numbers do not make the total expenses. So there's a couple of other expenses as well that they haven't included. But even so, the operating profit is massive. I mean, this is a 54% operating margin, very, very profitable. And if we scroll down to the next page, we see the bottom line the kind of the net profit is also very, very high. $16 million, 37% net margin. I mean, that is massive. So these guys are, you know, it's almost like owning a printing press and you're just being allowed to print money, which obviously would be illegal. So very, very profitable, significantly up. So, you know, here we go to 2019, to May 2019, they were only at a 7% net margin, and they've managed to increase that to 37%. So, you know, there's good news, you know, splattered all over this. Here's the balance sheet. And again, we're only getting the sum total. We can't see what's, you know, the detail of this balance sheet, but what we can see is the total current assets and the total current assets compared to the total current liabilities. So liquidity is not a problem at all. Looks like maybe they've got some debt. There's nothing in the income statement that is saying, look, this is the amount of interest we're paying. So we don't know if there's, you know, we could speculate there may be a little bit of debt in there, but if they are paying interest, they're not paying very much. And therefore it won't be a significant part of this business. So, you know, pretty debt free, mainly equity driven. There's the equity sitting on the balance sheet, and a little bit of non-current assets, not a lot compared with their current assets, but then it's a you know, a software business. They don't need manufacturing equipment and all that kind of stuff. So you wouldn't expect that to see that. So sum total balance sheet looking pretty strong. Those total current assets, very big number. Be interested to know how much of that is cash. Well, we can answer that question down here. So of current assets, this cash flow statement tells us that the cash at the end of the period was $17.9 billion. So lots and lots of cash on the balance sheet. Very strong cash generation. Okay, they have been making cash losses in the past. Now they're generating lots of cash. They are using some cash for investing. This is the investing. So this investing tells me not a lot of investing. And if they're not a lot of investing, that's only 624 million. That growth is coming from organic growth rather than growth through acquisition. That's what I'm concluding from that. So, you know, if so, you know, this is just, I mean, this is a success story written all over it. Somebody's got a Midas touch in this one. You know, they are doing incredibly well. So very strong growth, looking like it's coming from organic growth, which is fantastic. They are
just a quick note
generating
on
yes.
is 624,000, right? Not million.
624,000, yes. So
and
what did
17
I say?
And yeah, you said 624 million, but there's a lot going on in here. And 17 million, not billion, correct?
Yeah, 17 million. So yeah, that's me getting my thousands and millions muddled up. So well caught out on that. Yeah. So just so just to be clear, they are generating cash of 14.5 million Canadian dollars, which is fantastic. So very, very strong cash generation. A little bit less than their EBIT, you know, what we might guess is that, so their EBIT, but even so, they are generating cash. Little bit of investing going on, 624,000. As you mentioned, you know, so they're not buying companies. That's the point we're making here. And there is some cash being used in financing activities. Maybe that's buying back shares. Maybe they've been paying back debt if they had any. And the sum total is that they finished the year with nearly $18 million in cash. So, you know, something like a third of their current assets is made up of cash. So, you know, really, really, you know, strong cash flow, strong balance sheet, massive profitability, massive growth. You're kind of thinking, I mean, you know, it's almost like they can't put a foot wrong. So let's have a look at what the market thinks of these guys in terms of the share price. And here it is, as you said, it hasn't really gone anywhere. It's gone down and then back up again and then down again. It's bouncing around. But what we do see here, and we'll just highlight that, is this PE ratio, very expensive. Okay, this is a very, very expensive company. 240 times earnings, which means if they don't grow, it's going to take you 240 years to get your money back. However, if they do manage to grow at 500% per year for the next 10 years, then I think they're going to end up dominating the world. So, you know, maybe this is it could be relatively cheap. So, you know, what we're talking about, and you reiterate it again and again, Moeed, is that, you know, we've looked at the financials, but the financials is only part of the story. So, you know, what is the story that goes alongside this? Is this company growing? Is it expected to continue to see that stellar growth? Are we going to see, you know, sales reaching the billions? And if so, you know, this is a cheap company, buy, fill your boots. Or, you know, has it saturated its market? Has it plateaued? Has it peaked? You know, and is it going to flatline now? In which case, this is an expensive stock. So personally, I don't know the market. I don't know, but I kind of feel that, you know, if you've got a company that's you know, on 44 million Canadian dollars, that's not a big number. That, you know, we're not like, you know, at Facebook at 55 billion or Apple at 255 billion of revenue or whatever they're doing. I mean, you know, this is a relatively small company. It looks to me like they found the nugget of gold. They've got something that's working really well. People want it. It's high margin. They're growing rapidly. Maybe, just maybe, this is the nugget of gold that we've been looking for, Moe. Maybe you and I should have a little dabble and just, you know, stick our pension in there.
Maybe not pension, but certainly stick in the risk portfolio for sure. I mean, yeah, you know, we talk about this all the time, Ted, that we only look at the financial, the analysis in terms of the fundamental financials, and we recommend that people look at other information on the investment thesis. For this company especially, do so because the finances we showed are unaudited finances, right? So it doesn't contain the detail for you to really make have a strong picture of the business. And for this one, for sure, you absolutely have to put a lot more research into the other areas. But I mean, it's still valued at 2 billion, right? Market cap, right? On a revenue of 44 million Canadian dollars. So, you know, if anyone knows this industry incredibly well, you know, leave a note in the comment section. We'd love to hear from you all. So
yeah, we have to be careful here, Moeed. So don't forget, we're with the valuation we're looking at is in pounds because it's little. And of course, we're dealing in so the price is about 4 billion Canadian dollars, which is my kind of what I converted just earlier. So 88 times sales. So that's really what we're looking at. The price to sales is 88 times. Again, it's not a metric I personally use a lot, but you know, people do like using that.
Yeah. Well, if they make it big like Nvidia and others, and their designs are that popular, right, and it delivers on what they say, who knows, right, as you say, right? So this could be a good one. I'm sure this has been a really valuable video for all of our viewers. Love to hear your thoughts. Do like, share, subscribe. And if you have a company, just as our three colleagues, three fans here suggested, if you have a company you'd love us to look at, do leave a note in the comment section. As you saw now, we will honor that and analyze that company for you. So until the next video, thank you, everyone. Thank you, Ted. This was a very interesting one indeed.
Thanks a lot, Moeed. We will try and honor it, Moeed, but we're getting a lot of requests at the moment. So
that's true.
Yeah, see you later.
I was over promising there, but okay, we will.